Is it fair for banks to profit from farmers who are struggling for small profits?
Is it fair for a bank to profit from farmers who are struggling? I don't know the definition of struggling. We'll need to look at the benchmark of what we mean by struggling. But the fact is that if someone has invested their money to give to you to increase production, it is just fair enough that you give him something small. It is just fair enough to give him something small. After all, the bank has a give back to the community that the farmers don't actually pay. For example, I've been talking about the financial literacy program. That program is given to either farmers or any association that is organized. We come and train you about the money. We don't ask for anything. Okay, so probably what we are aiming at is to improve your skills of managing money so that you can be able to make more money and then bank with us. So we don't charge you for those services, okay? But where there is an investment, there must be pay.
Well, thank you very much, ladies and gentlemen, from the east to the north to the west. We want to welcome you to another powerful episode of A Big Conversation. And today we are glad to have again an expert from a banking sector, a manager of Equity Bank Soroti branch. We'll be discussing how farmers can leverage banks for growth and prosperity. Join me to welcome a general manager of Equity Bank. Nice to have you, and we want to thank you for honoring our invitation for the second time.
Thank you very much, James, for having me here. I think you should just make for me a room in this studio. Looks like I'm now appearing here quite often. So
you should. Yes.
Yes.
How are things progressing for the bank?
Well, the bank is okay. The bank is safe and readily available to support all our customers, the farmers and everybody who needs the banking services. So we're okay. We're doing good.
Yes. Today we are looking at one of the most sensitive topic, and it's when you talk of farming, it cuts across so many people.
True.
When we talk about leveraging banks, what does it mean to a farmer down there in the ground? Okay.
Thank you, James. I think as we discuss about farming is really a very broad picture, and as you're aware that the statistics show us that about 60 to 70% of the economy of Uganda is supported by agriculture, and of course, given the fact that agriculture is the backbone of our economy. So leveraging banks to support agriculture is a huge discussion. Really, it's a very huge discussion that I think all of us must be really interested in if we are going to see farming. I don't want to just use the word farming because farming is just a small component of agriculture. I would say if we're going to see agriculture move from one stage to another, then there is no way the financial players can be kept out. They must be in the system to see that we are able to support the activities in agriculture. So there is a lot to discuss, but looking at the chain value of agriculture, we are talking about from the stage of inputs, where probably farmers need to access things like seed, things like fertilizers, things like equipment to be used in their farms, whether it's a small farm at the level of maybe domestic use or to the level of commercialization. Of course, we know that that's the first stage of in agriculture chain. Then, of course, we look at the production now itself, the production of either crop production or animal husbandry, depending on the line in which the farmer is taking. Then we are looking at aggregation, then we are looking at distribution, then we are looking at probably marketing. So all that range of agriculture requires financing. Requires financing at one stage or the other. So that's where the banks now come in, quite in handy. So there is a lot that banks can be able to advance when it comes to that line. Yes.
Can farmers really grow their income through banking, financing, or it all favors those ones who are well established in agribusiness?
Well, my experience in banking is that farmers can actually benefit a lot from using the banks to advance the farming. If you, of course, you know that in the olden days we used what we call the rudimentary tools of farming, where you had the whole, you go to the garden and you dig. You know those the olden days. You know the history. So I don't think if we are still using such kind of methods in this era that we can be able to benefit from farming. So you notice that actually the farm inputs have gone higher. Most of the things that we're using are now related to technology. You're talking about probably tractors now for plowing. You're using the ox plows. You're using the oxen. Those are the items that require financing that probably a farmer may not be able to get just on their own. But to look at directly where I work, where in Equity Bank, what do we have for farmers at every stage of a farmer? We have what we can be able to offer them, and these are products that have been designed specifically to support agriculture value chain or production chain. So usually our population, of course, we consider the young people. The young people usually take a bigger percentage of the population. So at Equity, we've designed a product for young people for farming, the one I call the youth loan. I talked about it last time when I came here. Now this youth loan is given to the young farmers who are between the age of 18 to 35. Of course, we say when you're young, we are referring to you're below 35 years. So this loan is given to them to support any activity that they're doing on the value chain of agriculture, be it production, be it marketing, be it value addition. We give it to them. And how do I access this loan? Through their groups. Of course, we said the group must be registered under a sub-county with a CDO, okay? And then the group must have strong leadership. That's the chairperson, the treasurer, they must have a certificate. And I don't want to go into the details of the group registration. And so what happens that each one of them is able to qualify in a range of 100,000 shillings up to 5 million. And this money is unsecured. And again, I don't want to specify exactly what they will use the money for, but anything along the value chain of agriculture, be it production, be it buying inputs, they are able to qualify for it. And this one is unsecured. Okay? So if you're a young farmer, probably who is producing cassava, let's say on 1 acre or 2 acres, you can now upgrade your production to, let's say, 5 acres, because we're willing to give you this money as long as you belong into the group. You go and use it for production of cassava, and then you pay it back after the cassava is matured, and then you sell it back. Okay? So from that perspective, we look at that as one of the products that can be able to support, the young farmers. And young farmers here may be male or female, but that's the idea. And then still within the same range, we still have the loan that we advanced through the groups for the women. I talked about it last time again here. The one we call Equimama. The Equimamas can still use this facility to develop the agriculture. Again, the purpose of the loan could be along the chain of agriculture, either buying inputs or it is production itself, things like weeding and all that, or marketing, or it might be actually you're dealing in produce and you want this facility to be able to maybe buy seed from the farmer's clean and sort. It is still a product that you can be able to use. Okay? And again, I'm referring to this as the unsecured. Again, the product which does not have, we don't ask for security from the women, provided they belong to groups and the groups are registered. We're able to give them to them. So and for me, James, this has worked because you've been with me on certain forums where we've been able to support quite a number of organizations that are working with groups, be it local government, be it what we've been able to work with these groups. What is attracting them to us is basically the fact that we're able to support them, the customers, right from grassroots, and able to support them. And again, just right there, I don't know if you have any questions. I feel like I should just say this.
So you have been talking of soft loans.
Yes.
How different is soft loans with the other loans?
No, for particularly for the
farmers,
for the loans that directed towards any and the chain of agriculture, what happens is that the repayment is customized based on the production. For example, if we're talking about production, okay? So what makes them a bit different is how the loan is structured. They're all financing, they're all loans, but what makes it different is how are they structured. For example, if you're taking a loan for cassava production, the structure of your repayment will not be the same with someone who is taking a loan for animal fattening. They are all in agriculture, but totally operating in different dimensions. Or someone who is producing cabbage or tomatoes. You can't give them the same loan structure like the one someone who is producing what? Cassava. So basically the difference lies in how the loan is structured, because we look at the farmer and we customize the loan to that particular farmer.
At what stage should a farmer run for a loan? Is it before growth or after growth?
No, all the stages, because you see the agriculture value chain. Maybe if I just take you back slowly, we have the stage what we call the input stage. At that stage where you're buying probably seed, you still need money, because you'll find that you need the modernized seed. If you went to institutions that sell the modern seed, they will tell you the improved seeds are slightly expensive more than the local seed. So you still need money. So we can finance you at the input stage, okay? We can finance you at production stage. Now you're in the garden, you're cultivating, you need weeding, that is production, okay? We can finance you at harvest or at aggregation stage. And by the way, as you discuss farming, one of the stages where farmers usually lose money, I don't want to divert you, is usually at harvest stage, because probably you're lacking good storage and all that. So whatever you've gotten from the garden somehow ends up getting into bad quality, and that affects the sale in the market. So as you go to sell, the quality is poor, the price is low, you make a loss. And then of course it can also be at marketing level, okay, or transportation. That's all a chain of agriculture. It's all a line of agriculture, right from the garden to the last consumer. So we finance at that. So depending on at what stage you're in, we're able to finance you. If you're still at production, we still finance you at production. Our desire is that we work with a customer throughout the whole chain. Okay, we finance at production, we finance at the aggregation, we finance at the processing and value addition, we finance at marketing. Only that the financing will be different because of the different stages. I don't know if that rings a bell.
Yeah, but I'll put you very well. But also putting in mind that farming is unpredictable.
Yes.
Yes, in most cases, farmers get loans with the hope that the season will work on well.
Yes.
As a bank, when you're giving people a loan,
yes,
you look at that in farming.
Okay, I think that brings me to one of the things that we do before we give you a loan. I talked about this last time here, that we have a fully fledged department of financial literacy. Now, in this financial literacy class or discussion, some of the things that we are talking about, depending on the target group of people that we're meeting on particular day, if it is farmers, one of the things we are talking about is how are you marketing? What happens in case you've done, probably you've done cabbage and it has not worked out well. So, but one of the things we encourage farmers is to do diversification. Because you see, the season may come and one product will work and then the other will not work. So you should have a fallback place. But also, most of the loans that we give the farmers are insured. So depending on the calamity, if it is a natural calamity that has happened and you're not able to harvest, then you should be able to report to us so that we can be able to invoke insurance to come and see how to support you during that scenario. For example, I will give you an example. I will not mention the name of the customer, but recently we gave money to a farmer, a rice producer in one of the sub-counties here. And in the process, I think somebody who was not wishing him well went and poured herbicides in his farm garden, and about 10 acres of rice all dried out, you know, just like that. So when that happened, he was able to notify us through the local leaders. We went and visited, and because he was on insurance package, insurance was able to come and pay up all the loan and make sure that he was able to get back to whatever he was doing. So there are quite a number of mitigations that we can be able to support the farmer with during that engagement that we're having with the farmers. Yes.
Well, we have seen most of farmers falling into debts. How best should they use the strategy? Which strategy should they use when they are acquiring this loan so that they will not end up into a debt trap?
Okay, borrowing generally is a principle that requires a lot of being careful, I would say, from my side. Is that before you borrow, there are key things that you need to analyze. One, why are you borrowing? What's the purpose of borrowing? You may find that most of the people who have landed into debt traps is that when you borrow, probably you have a purpose A is the reason why you're borrowing, but when you get the money, you use it for purpose B. Okay, so it requires a lot of discipline for you to know what is the purpose. Why am I borrowing this money? Am I buying inputs? Am I buying ox plow? What is the purpose why I'm borrowing? And when you get that money, because by the time you decide to borrow for that particular reason, there is something you're looking at. Probably you're looking at increasing production, or you're looking at weeding, or you're looking at cultivation. So when you borrow that money, the first thing that I always tell people is make sure you use the money for the reason why you borrowed it. But also, you need to look at the interest rate, because not every lender is regulated by Bank of Uganda. Not every lender has very good interest rate. Before you borrow, as a farmer, you must pick attention. You must be interested to ask those hard questions. I call them hard questions. So what is the interest rate? How am I going to pay back this money? Okay? Because sometimes you can borrow rightly, and then the structure of the loan is totally poor. For example, if you're a farmer, why would you go for a loan that requires you to pay on a monthly? You understand what I'm talking about? You have gone for cassava production, and then you've gone to borrow from someone who's going to keep asking you to pay money on a daily. I've seen this happen. Every day you have to pay, but you've borrowed for cassava production. The question is, where are you going to get the money to pay on a daily if you're going to take an average of 1 year to produce cassava and put it in the market and sell? You understand?
Yes.
So I think the issue of debt starts from personal discipline. That's largely how I look at it. How you manage your debt starts from you as an individual, or you as an entity who is interested in borrowing, because there are some things that you must be able to understand before you get into borrowing, to avoid a scenario where you find yourself deep ditch into debt.
Yeah, but also I'm so much interested in community perspective.
Yes.
To banks. They
Yes.
always say that banks want money from people. They want to get all the small profits these farmers get. Instead, they are not targeting on elevating them. How much sense would you make out of that?
Well, I think that's wrong, because I know banks want money from customers, because obviously there is no person, even if it were you, there is no person who will go out there to do a business with a mind of making a loss. Okay?
Yes.
So me, I like to be very honest. Okay? Yeah. But I think we need to have rightful information, because you may find that the information you have is totally different from what is happening in the market. For example, we have the SCF loan, the agriculture facility loan, which is of course given to the farmers through the commercial banks, but this is largely supported by Bank of Uganda. This is one of the cheapest loans in the banking sector, with an interest of 12% per annum on reducing balance. So we still have a lot of cheap financing that farmers can be able to benefit from, okay, out there. Only that sometimes they don't have the rightful information. But when you come to us, we give you the rightful information. And I'm very happy that you're inviting me to be on this show. That means my people down there benefiting.
Now, should farmers go for these loans for expansion, buying of equipment, or survival during the toughest times of seasons?
Okay, I usually prefer that we borrow for growth. Because survival, we don't have consumer loans in the banks. There is no way bank can give you money to just go and eat and enjoy. Okay,
Yeah.
that money probably is not there, so you'll have to wait until when you've produced your sim or you've produced your rice, whatsoever it is. When you sell and you get some money, maybe that's part of what you'll eat. But largely, when you're borrowing, the idea is that you're borrowing for growth. You're borrowing for expansion. You've been producing maize on 10 acre. Because the bank has come, is able to support, you can now grow your production from 10 acres to 20 or to 15 or to 30. That's the idea. That's the idea of borrowing, because we want to increase your capacity to produce more, because when you produce more and you find good prices, you're able to make more money from the production. So ideally for me, I would support the idea of borrowing for expansion or for growth, but not for consumption.
So what system should they put in place before they go for a loan?
Before they go for loan, basic analysis. Look at the activities that you're doing. If you're a farmer, if you're doing animal fattening, for example, how many animals do you have? What are you doing? Is it goats? Is it sheep? Is it cattle? How many animals do you have? Have a plan. Where would you want? How many more animals would you want to have by end of the year? You understand? So those are the basic concepts I'm talking about. So look at yourself. What is the price? What are the prices of the animals? When is it best for you to buy the animals? When are the prices lower? Probably that's the time you should plan to get a loan. Get a loan a month or two as you're moving to a stage where the prices are lower. We all know that when children are going back to school, most farmers want to offset their animals so that they can be able to take care of the school fees. Okay, so maybe that's the season you need to buy the animals and you stock, and then you fatten, and then after a certain time you sell and be able to make some money. So it depends on the activity that you're doing actually that should be able to support you. I usually, for my customers that are doing animal fattening, most of them make a lot of money in this season when we are moving to ED, that ED for the sacrifice of animals, right? They buy a lot of animals, they fatten, during that time they're able to sell and they make money. So it's about you understanding the seasonality of that which you are doing as a farmer, because we are discussing a broad-based approach. So but now we need to customize it down to every farmer, and that applies at an individual basis or at that individual level.
If you think about that, you can really understand that your loan is taking you badly. Oh,
it is. You will know that your loan is taking you badly. For example, if you start missing your installments, that's already a sign that your loan is not taking you good. If you did a bad supply, that's already a sign that your loan is not going to treat you well. If you bought animals at a very high price and you're selling at a low price, that's already a sign that your loan is going to take you badly. You understand what I'm talking about?
yes.
If you're spending above the average price for production, for example, we all know that right now to plow an acre of land, on average you need to pay about 120,000 shillings. So for you, if you're plowing at 180, that's already a sign that the loan is going to treat you badly, because you're going beyond the average ranges. Okay, so the signs are always there. Okay, if you're overspending, it's already a sign that the loan is going to treat you badly.
Then that one will turn out a bad loan, like good loan.
Of course, in the process, if you're not honoring your loan so well, it becomes what? A bad loan. But maybe, James, allow me just to take you back shortly. I discussed about the youth loans for farming. Then I discussed about Equimama. Also, allow me say that we also have what we call the asset financing, still within the chain of agriculture. For example, you're producing tons and tons of rice, you don't have transportation. We can be able to lend it to you. You buy a truck that is able to transport your produce from wherever you are to the market. We also, at the same time, we can be able to give you asset financing for mechanization. We're able to give you money to buy a tractor that you can be able to use to, to increase your production. At aggregation level, we are still able to support you if we have a need with our products in the bank. At marketing level, marketing has all my people who are dealing in produce, who are buying, and we are able to give you still money to be able to support. So that's all the chain of agriculture that I'm referring to, that we're able to finance. Yes.
Well, thank you very much, ladies and gentlemen. We are still engaging with the General Manager of Equity Bank Soroti branch, Mr. Francis Ochiba Erumu. He sacrificed his time to engage with you, the viewer outside there. But manager, I want to, as we get into, as we are coming to an end.
Yes.
The following, I've tried to analyze your statements, your explanations. Do you have any successful stories of farmers that have used equity?
We have quite a number. Only that you'll permit me not to mention their names here, because I am very concerned about the confidentiality of the customers. But we have quite a number. Largely, we have dealt with almost all across the chain of agriculture. We have farmers that have been able to take loans for animal fattening and have successfully paid their loans. We have farmers that have been able to take loans for production. A huge number. I would tell you about 50% of my portfolio in Soroti is largely related to farming. Okay, and we've had the experience of dealing with the local farmer in the village, and also dealing with the farmer who is at the commercial level. Okay, so I just want to encourage my people there that actually the products that I'm referring to or that I'm talking about are products that have supported so many, and the testimonies are all over. You know, we have worked with organizations, quite a number of them. You know, I may not mention all their names here, but we have worked with quite a number of organizations across all TESO supporting. Recently, we are having an organization that we're working with that is all the way from Tanzania. They're in Eastern Uganda for production of beans, and their concentration is in Kalaki and Kaberemaido. And the financial partner for that project is Equity Bank. The other day we were launching the project for Kajila, that is supporting farmers across all TESO in sub-region. We've worked with jet streams. There are quite a number. I can't mention them, but what I'm just trying to say is that the bank is well facilitated to support the farmers. And I will tell you that if you're in Eastern, there is no way you can be banking in Eastern and not dealing with the farmers, because Eastern, largely, what are we dealing in? It's largely production of farming. It's largely farming. It's largely agriculture. We don't have manufacturing. The only factory we have here is Soroti Fruit Factory. Okay, that is producing fruits. But again, that's also farming. That's also agriculture, because the reason why it is here is largely because we believe that we're able to get fruits from the local community and be able to supply to the factory. So if you're in Eastern, there is no way you can do business if you're not dealing with a farmer in one way or the other.
Do you detect farmers who are trustworthy when you're giving a loan?
Yes, we are able to know. Of course, in banking, there are quite a number of channels that we use to verify whether you're a rightful person. We can give money. For example, we use your CRB, and this is what I would want to tell the community that are watching. Previously, Bank of Uganda had given us what we call financial cards. Now, the financial cards, then, whatever we wanted to search for history, we would put them in the computers and able to see how your payment is. Now, currently, Bank of Uganda has made the NIN of your national ID as a central number. It is now the new financial card. So what happens is that any borrowing that you've ever done, either on phone, using the mobile phone or what, all of it is linked to your what? To your NIN. And the reason why I'm sharing is this because lately we've had a lot of cases where people come to the bank as they want to borrow money. When we insert their nails to look at their financial history, you find that probably somebody in 2000 owned a SIM card. They used it to borrow some money from either MTN or Airtel, and they threw it away. And in their mind, they thought that the whole story is closed. Okay, but now all those loans can be brought back into the system because we are able to view and see somebody who has a loan that has taken 3,000 days, 2,000 days not paid, simply because now the NIN is the central number that we are using. And I would also want to encourage the public. We also see so many times instances where people give their national IDs to either their children or their neighbors or their friends to go and register to get these lines from either MTN or Airtel. And eventually when they take those lines and borrow using their loan, those lines, those loans are tagged into your NIN. So I think we need to treat our IDs with a lot of respect so that we avoid scenarios of that. But yes, answering your question is at a group level, the groups vet themselves. If we belong to the same group, it is unlikely that if you're not a good payer in a group, it's unlikely that they will keep quiet. They will tell us, they will say, but you want to give that man money. Okay, that man, even before we go to look at your financial card or your NIN number, we would have already gotten information that that guy, every time he borrows, even if it's 5,000, he doesn't pay. Okay, so I think the bank has a lot of structure on how we're able to vet the people that are borrowing. So not everybody who comes wanting the loan that qualifies for the loan because of the vetting process that we go through. Yes.
Is it fair for banks to profit from farmers who are struggling for small profits?
Is it fair for a bank to profit from farmers who are struggling? I don't know the definition of struggling. We'll need to look at the benchmark of what we mean by struggling. But the fact is that if someone has invested their money to give to you to increase production, it is just fair enough that you give him something small. It is just fair enough to give him something small. After all, the bank has a give back to the community that the farmers don't actually pay. For example, I've been talking about the financial literacy program. That program is given to either farmers or any association that is organized. We come and train you about the money. We don't ask for anything. Okay, so probably what we are aiming at is to improve your skills of managing money so that you can be able to make more money and then bank with us. So we don't charge you for those services, okay? But where there is an investment, there must be pay. In reality, it might be in a minimal way, it might be at a low interest rate, but still it is also an interest that you have to pay back.
All right, thank you very much. Thank you very much, ladies and gentlemen. It has been so much interesting to interact with an expert from the banking sector. Mr. Francis Ochiba Erumu, General Manager of Equity Soroti branch. It has been so much interesting, and we want to thank him for giving us his time. Next time again, when we invite you, I believe you will honor our invitation.
I'll come, but just make for me a small office here so that I can be staying here.
Okay, we shall do it. We shall do it. I want to thank the ones behind the production, Nova Promotions, and all the people who will be watching this in different media platforms. Thank you very much. I remain James Alomu, the only Italian born in Teso. Thank you.
Yeah.